How's it, guys? Welcome back to FX Rhapsody. Today's video is going to be about breaking of structure, swing high and swing low, where to place that Fibonacci for that perfect entry. I've had a lot of comments on the in my videos, and it was just easier for me to show you instead of just commenting back. So before we hit the charts, just go visit my website on the bottom left corner over there, where you can find some previous trading material, some nice video categories for those of you that's getting started into trading or a little bit into it. There's some nice strategies that you can watch. There's also nice resources you can download. Go look at my preferred brokers, guys. You always need a preferred broker, a brilliant, reliable broker behind your side, and go look at these guys. They're absolutely brilliant. To having one of those behind your side and you know your money is safe when you trade. So yes. Okay, let us hit the charts. So we're looking at swing highs, swing lows, breaking of structure, and how and where do you place those Fibonacci's. So basically I'm looking at it at the 5 minute. This chart currently here is the 5 minutes of the EURUSD. You can trade it on any other time frame. Doesn't matter what time frame you're trading, doesn't matter what currency or indice you trade. Go back test this and see how it works on all time frames. And I mean, this is just the way Forex charts run. What we have here is we've got a high in the market currently, okay, in this little area. That's the high, and we're looking at this is the low. So breaking of structure for me is if price breaks and closes above this high, or breaks and closes below this low. Okay, that is what we're waiting for. When it does, we wait for a retracement to happen in the market. So what we see is price goes up and it breaks and closes above it. Okay, so that is a break of structure for me. I'm just gonna zoom out a little bit. So that indicates to me I am going to be biased in a buy for this. So that's another comment I had. How do you know when to trade or be biased on a certain time frame? This, to me, I'm looking at a buy opportunity. It breaks above the previous high of these candles over here. Okay, this little time frame that I'm trading at. So another thing I want you to notice is this was our previous low, okay, but price went up and it formed another downwards movement, and then it went up. Wherever this break happens, you go back and you see where the price made a little movement down, a little wave. So that is going to be my next low. That is going to be my area that I'm going to be focusing on. So that's my low, my swing low. So I'm taking this out. So I am going to start my Fibonacci on there. So now what we want to do is we want to wait and see where price turns. And that is the area it turns. So that's going to be my swing low and my swing high. So I move my Fibonacci up. Okay, taking this out. I don't want too much on my chart. And now I'm going to wait for a retracement to happen in the market. So I'm going to take my my highlighting tool, and I'm waiting for price to hit that area between the 62% and the 79% area. So now what I do is I just wait, and right there, as you can see, price tapped into that area. Okay, right there. Just a small little tap. I'm zooming in, as you can see, and that's where you place your buy entry. Okay, so what I'm doing is I'm taking my Fibonacci out. I'm in a buy. Where is my next high? Where is the next break of structure that I'm waiting for? Right there. Okay, that's a new high it formed. That's going to be my new area that I'm waiting for structure to be broken. I'm already in my trade. I'm already in my buy trade. So now what I do is I'm just waiting. I'm waiting to see what price does, and confirmation that my trade is in the right direction again. So now what I want to do is I want to wait and see where my next swing is going to be, my swing high and swing low. So just going to take this out. I just don't want to confuse you guys too much. So we're already in this buy trade. Okay, I'm just going to leave that there. Where is my low, my swing low, if I'm going to start placing my Fibonacci? It is obviously going to be this one over here, because with that break in structure, that was the recent low it made right there. So I'm taking my Fibonacci and I'm placing it there and I'm starting it there. Now what I'm going to do is I want to wait until price forms a nice little downwards movement. Okay, where's that? Right there. You see that? So I'm taking my Fibonacci and I'm waiting for that area. It's going to be my swing high. So I've got my swing low, my swing high. What happens is price goes and taps into my 62% area. So there's two scenarios now. So number one, if you are in this buy trade and you climbed out here, okay, you thought to yourself, okay, I've got enough pips and price is going to start shooting down, and you climb out your trade, this is another second opportunity. So if you are out the first trade or you missed the first trade, this is a second opportunity that you could take for another buy opportunity in the markets. If you are still in this trade, this could be your confirmation of just keeping your trade open or just adding another trade to that current one that you've got. Okay, and as you can see, price just follows that movement in the market. Do you understand, guys? So now what we have is, I'm just going to close this. So we do have price going up and down, forming lows and highs and over here, but we're not waiting for that. What are we waiting for? We are waiting for break of structure to happen, which will be this area over here, because we're waiting for that next high to be broken for more confirmation of price going up. So we're sitting on our hands, we're waiting, we've got our trade open, and we're waiting for something to happen, and lo and behold, price breaks that area in the market. So now, where do I place my second Fibonacci? Where's my swing low that we just talked about? Is it going to be over here? Is that going to be it? No. My swing low is going to be this candle over here, that low, because that's the area in the market that price broke that structure, the previous high. So now, where do we place my high? We still wait. We wait until we see a turn in the market, and right there, that's going to be my high. So we have got a swing low, swing high, and what are we waiting for? We're waiting for price to return or retrace to the 62%. Oops, to the 62 to 79% area. So now, and there it is, right over there with that candle. So now you've got, if you stuck to your first trade, you entered another one. Okay, you've got confirmation. So there is your first one. There's your second entry. There's your third entry. If you missed the first, you could have had a second entry. If you missed the second entry, you could have had a third entry. It's just to show you that there's always opportunities in the market as well, guys. For if you missed those entries, and look at that, price just shooting up again. So guys, that's how I look at my break of structure, my swing highs and my swing lows. I really hope this helps you guys, for those of you that commented in the videos, and for those of you that's just been, you know, wanting to know. So that's all from my side today. I hope this video, you enjoyed this video, and if you did, don't forget to hit that like button, subscribe button, notification bell. Show me some love by hitting that super thanks button. And guys, you know, stay tuned. There's going to be more videos coming to you this week. So I hope you've been having a wonderful week so far. Stay safe and happy trading, guys.